Chinese stocks decline on Friday amid US economic uncertainties. Argentina's Congress backs an IMF loan plan, marking a key victory for President Milei and clearing the way for a deal. And we look at the disruption to global travel after Europe's busiest airport closes due to a fire. Hello, I'm Toba Aydin with the latest business and finance news here on TRT World. Hong Kong markets led losses in Asian trading amid uncertainty around the US economy. The Hang Seng Index fell more than 2%, dragged by healthcare and consumer cyclical stocks, while mainland China's CSI 300 fell around 1.5%. Japan's Nikkei 225 rose 0.36% before retreating to the flat line, while the broader topics added as much as 0.7% to rally to its highest since last July. South Korea's Kospi added 0.14%, while the small cap Kosdaq dipped 0.38%. Overnight in the US, all three major indices declined, thwarting the market's attempts at a recovery from a month-long rout. Let's get more on this now with Tim Waterer in Sydney. He's Chief Market Analyst at KCM Trade. Hi there, Tim. Now, Hang Seng Index has slipped more than 2% to end the week. What's behind this sell-off?
Nice to be with you. Yes, that's right. I think what we saw today was basically a typical situation of investors taking some risk off the table ahead of the weekend. We know that we're a very headline-driven environment at the moment. We know the US president is prone to making some off-the-cuff remarks about trade and tariffs. So I think we saw some profit-taking happening. So one good example would be the tech stocks on the Hang Seng. So they've been an outperformer this year. They were one of the heaviest decliners today. So yeah, I think traders are just seeing a good example to take some profit given that uncertainty, like you mentioned, particularly in the lead up to April 2. So we're in a bit of limbo right now until we hear further details about those reciprocal tariffs, I think.
Right, and US markets had attempted to recover earlier in the week. What's behind the sentiment over there on Wall Street?
Yeah, still very volatile, but as you say, there was an attempted recovery, kind of stalled out a little bit last night. I think the words from Fed Chairman Jerome Powell, I think that provided some solace to traders when he basically did indicate that the Fed does still see 2 further rate cuts happening this year. Now, while he did point to uncertainty, I think traders are looking for a silver lining amid this tariff uncertainty and thinking, well, at least we're still looking on track to get looser monetary conditions, which are more conducive to growth. So I think that's one big factor. And had some macro data in the US last night. So the existing home sales, Philly Fed index, they were pretty decent, small decline from prior readings, but still well into positive territory. So I think that just calmed down some of the panic selling we're seeing, but still think we'll still be in for a volatile period. Like I say, it'll be at least up until that key April 2nd deadline.
And bucking the trend has been Japanese stocks, with the topics rising to some 9-month highs. Tell us more about that.
Yeah, that's right. Japan, an outperformer. I think the data today certainly helped the cause. So we saw that Japanese inflation figures, they came in a little bit softer than previous readings. And that caused a decline in the value of the Japanese yen by about 0.5%. So that decline in the currency, that boosted the export segment in Japan. That helped the market. And I think there's also basically a reading of that the inflation figures today. While they are still at 3.7%, well above the 2% target, they did come down from that 2-year high in January. So while we still expect the Bank of Japan to be raising rates this year, the data today didn't suggest they need to do it imminently. And I think the market took some comfort from that and put on a good showing to end the week, despite, as you say, that trade uncertainty still lingering.
All right, Tim Waterer, we will have to leave it there. Thank you very much for joining us.
Thank you.
Argentina's economy faced a tough year in 2024, with the country under strict austerity measures. But there is a glimmer of hope as the economy has showed signs of recovery recently. The last quarter of 2024 brought some good news. Argentina's GDP grew by 1.4% compared to the previous quarter, marking the second consecutive quarter of growth. This uptick provided a much-needed boost of optimism, showing that the economy might be turning a corner. The year-end performance was even more surprising. Argentina's GDP posted a 2.1% increase in the October to December period, beating analysts' forecasts of 1.7% growth. But overall, 2024 saw a decline of 1.7%. The country's inflation, which has been spiraling out of control for decades, has slowed to 66.9%. But even with this improvement, Argentinians continue to face harsh realities of high living costs and cuts to public services. While the government has started to ease some of the capital controls, the economic plan is far from over. Argentina's government is now focused on negotiating a new agreement with the IMF. A vote in the Chamber of Deputies managed to get the preliminary approval for the loan. This would help the central bank stabilize its reserves and remove capital control, key factors that will help Argentina's economy return to sustained growth. Now, despite the good news, the opposition to Milei doesn't seem to be cooling anytime soon, with strikes, protests, controversy and change bringing new challenges. Once again, thousands of Argentinians have taken to the streets of Buenos Aires, but this time it's pensioners demanding financial reforms. They want a minimum pension of $240 and full coverage of medicines. Social organisations, trade unions and even football supporters joined the demonstrations, calling for urgent action on the rising cost of living. The government deployed a large police force and restricted access to key areas near Congress to prevent disruptions. Meanwhile, Argentina's most influential union, the General Confederation of Labour, called for a 24-hour strike on April 10th. For more on this, let's bring in Latin America analyst Javier Farge in London. Firstly, Milei has received the green light from Congress on another IMF loan. What implications could this have to Argentina's already struggling economy?
Well, it's going to help. As you said at the beginning of your report, this money, which is believed around $10 billion, although the government has not revealed what kind of agreement they are going to discuss with the IMF. They expect this to be completed by May. They will be able to pay the central bank the reserves. At the moment, the reserves in the central bank are in the red by an amount of $7 billion. The central bank has been using that money to buy dollars and the money market in order to be able to stabilize the market and fight inflation. So this money is going to help the central bank to increase its reserves to be able to move around with that money. It is good news for the government, obviously, and that's going to reinforce some kind of trust by investors in the Argentinian economy. And it is believed that many parties which would have voted against this measure before, knowing that this money is going to go to the central bank reserves, is going to help the economy in Argentina. We have to understand that, of course, you are right. I mean, inflation has gone down a great deal compared to the 300% a year in the last government. But it's gone up again in February by 2.4%, which means that the consumer price index has gone up by 0.2% in relation to January. So the government wants to go below 2% a month. This is the target that the government has. They haven't achieved that yet, but obviously inflation has gone down, and this loan is going to allow the government to increase the central bank reserves, which they will use these reserves in order to buy dollars and get into the money market to be able to stabilize the exchange rate. We mustn't forget that at the moment they've been using what they call the crawling peg. The crawling peg is a mechanism in a fixed exchange rate system by which the government can appreciate or depreciate the currency. At the moment, they've been devaluing the peso by 2% a month. The central bank has decided to lower by 2% the crawling peg in order to be able to strengthen the peso. So this, in general, is good news for the government.
Right, and we mentioned inflation in the country, which is one of the highest in the world, has slowed, but people are still facing a high cost of living. How could a new loan worsen conditions for Argentinians?
Well, obviously, this agreement with the IMF will not benefit the people. You mentioned the pensioners. Pensioners have been complaining because they have frozen their increases, but also they have abolished the subsidized medicines. So pensioners have been complaining that this is the case. This is part of the measures that the government, the strict measures that the government has taken, the austerity measures the government has taken to reduce the fiscal deficit, which is affecting the poorest in society. Many of the subsidies that the government used to have for the poorest people, for example, in Argentina have been totally abolished. So this decision by the Congress to approve a request of a new loan from the IMF is not going to benefit the majority of the population. You mentioned the protest, the biggest confederation of unions in Argentina approved, as you said yesterday, a general strike of 24 hours for the 10th of April. So on the one hand, in the macroeconomic terms, this is good news for the government. In macroeconomic terms, you are right, the GDP has gone up, but that hasn't got trickled down to the people in Argentina who are getting poorer and poorer every day.
All right, Javier Farhay in London, thank you very much for being with us.
Thank you.
Now a quick look at some of the other top business stories from around the world. Inflation in Japan eased slightly in February, with core prices rising 3% from a year earlier. That's down from 3.2% in January, helped by government subsidies for electricity and gas. But prices for food, fuel and housing are still high. The Bank of Japan kept interest rates steady at 0.5% in its March meeting as global trade tensions grow. The OECD says global debt from governments and companies passed $100 trillion last year. Interest payments now comprise 3.3% of GDP for OECD countries, more than what's spent on defence. The rise in borrowing costs leaves many nations with tough choices. The organisation warns that even with rates easing, debt costs will remain high. And a group led by private equity executive Bill Chisholm is buying the NBA's Boston Celtics for $6.1 billion, with 6th Street pitching over $1 billion. Chisholm says he aims to uphold the team's special role in Boston. If approved, the deal will close this summer, keeping CEO and Governor Wyc Grousbeck in place through 2028. Now, for over a century, petrol and diesel cars have dominated the roads, driving economies and industries. But their era is nearing its end. In the UK, a ban on new internal combustion engine vehicles from 2030 is adding pressure on automakers, especially Britain's small-volume iconic car companies. Omar Bakalola reports.
This car might look like it's been sitting untouched in a garage for decades, or like something you would only see in black and white photos. But it's brand new. Iconic British carmaker Morgan Motors has unveiled its latest flagship model, the Super Sport, a blend of traditional craftsmanship and modern performance.
When you get into a Morgan, you're not dazzled by a large LCD screen. You have beautiful handmade dials that look almost like watch faces, but the technology is all there. It's hidden technology. You're able to appreciate the materials, the leather, the environment, but when you want to connect your phone, listen to music, take phone calls, it's all there and available to you.
The company has recently ramped up its presence in the US, the Middle East, and Asia, with growing demand for its handcrafted cars. But the latest launch comes at a time when Morgan and other boutique British carmakers face an uncertain road ahead. The UK plans to phase out new petrol and diesel cars, with full electrification mandated by 2035.
So we are really looking for the government to set a timeline that's clear, but also demarks when we need to go and transition to electrification compared to those of the larger manufacturers. Because like we do today with BMW engines, we would look to a larger manufacturer for the technology that we'll integrate into our cars. So it's really, really important for us that the timeline's clear, but also the timeline matches what is economically viable for small manufacturers.
The looming ban presents a major challenge. especially for small volume manufacturers like Morgan.
So when we look at the ICE ban, at the moment, the UK government have been discussing bringing it forward from 2035 to 2030. And with that, it would force Morgan to go straight to an electric vehicle because it's very difficult for a plug-in hybrid architecture to be integrated by a small manufacturer into such a small car.
The UK's auto industry is already struggling. Last year, car production plunged to its lowest level since 1954, with fewer than 800,000 vehicles rolling off British production lines. Supply chain disruptions, high costs, and declining demand have hit automakers across the board. But for now, Morgan and its peers continue to hold on to tradition, hoping that there's still a place for cars that look like they belong to another era, but are built for today. Ömer Bakaloğlu, TRT World.
Let's go to London now and speak with Steve Fowler, who's an automotive editor and consultant. Steve, UK car production is at levels not seen since the 1950s, and major European automakers like those in Germany and France are facing production halts and plant closures. So what are the main factors behind this downturn?
I think it all comes down to the state of the market at the moment. I think if one word describes it, it's turbulent. It's a very, very tricky car market. In 30 years writing about cars, I've never seen anything like it, all the external influences. The bottom line is demand is not there at the moment, and there are too many factories producing too many cars. My view is that there needs to be some very tough decisions made. This has been going on for quite a while, and it has been easy to force a lot of cars onto the market through various incentives. But the consumers just aren't there. In the UK, the car market, particularly the electrified car market, is being propped up by fleet buys, not private individuals. And when there's turbulence in the car market, the consumer picks up on that and they just don't buy.
Right, and the EU has set a 2035 deadline to ban new internal combustion engine cars, but there have been growing calls for revisions. How realistic is this target in your opinion?
Yeah, I think governments across Europe are considering this. Certainly in the UK and the EU, they're looking at things. Various changes have been made. But as well as turbulence in the market, what the industry really needs is stability. Now, I was with Stella Lee, who's one of the senior bosses of BYD, a Chinese company, earlier this week. And she said, bizarrely, the UK is probably the most stable market in Europe. It doesn't feel like it. You know, we're going through a consultation at the moment as to whether that 2030 deadline applies to fully electric cars or plug-in hybrids or hybrids. Now, as an auto industry trying to plan, that's only 5 years away, and it's so difficult to work in those unstable conditions. We just need some sort of stability, which will filter down to customers as well.
And how are major European automakers adjusting their strategies to meet regulations? Are they shifting their investments or lobbying for a softer approach from authorities?
Well, a bit of both. It's a good question. There's definitely an awful lot of lobbying going on. I've said in the UK there's a consultation and the car makers will be engaged with government like they never have before. But yes, strategies are being adjusted as much as they can. Car makers need to work some way in advance, and they had perhaps gone too soon, too quickly on electrification. So we are seeing them roll back, start to invest more in traditional internal combustion engine technologies and hybrid and plug-in hybrid technologies. So yes, they are trying to adjust their strategies while lobbying hard.
Meanwhile, Chinese EV makers are aggressively expanding into Europe with lower cost models. How significant is the threat to traditional European brands?
Yeah, I mean, that's something I bring up with a lot of the car companies all the time. If you think about the European car market as a pie, that pie isn't going to get any bigger anytime soon. You know, there aren't going to be a load more customers. So the Chinese car makers, which are coming, you know, we've got BYD building a factory in Hungary and another one in Turkey. The Hungary one I've heard is 300,000 cars are going to be coming out of that. That's going to go onto the UK market. So every traditional car maker is going to be challenged like never before in terms of these Chinese car makers who are offering something different, particularly around technology. So how the existing manufacturers maintain their market share and their sales numbers is going to be really tough.
Right, a lot of uncertainty there for European car makers. Steve Fowler, thank you very much for your analysis. London's Heathrow Airport has been shut for the day after a fire caused a major power outage, cutting electricity in the area. Officials say the UK's busiest airport will stay closed until at least midnight. More than 100 flights have been rerouted, and the disruption could affect over 145,000 people in the coming days. And for more on this, let's bring in aviation and travel editor Geoffrey Thomas in Perth. Geoffrey, thanks for being with us. Now, Heathrow is the UK's busiest airport with a record 84 million passengers passing through its terminals last year. How significant is the disruption likely to be to global travel?
Oh, this is a massive disruption. It's the second busiest international airport in the world after Dubai. Aircraft are coming in from right across the globe, from Asia, Africa, the Americas. And one of the problems here is that a lot of those flights are long-range operations. So when they do land, and they're not landing at Heathrow, they're landing somewhere else, they're diverted, their flight crews are out of duty hours. They can't fly the aircraft for another 12 hours. So not only are the passengers disrupted, the airline is disrupted further by having their aircraft in the wrong place with crews that are out of duty time hours. So the knock-on effect of this could last for many, many days, because those passengers also who are not travelling to Heathrow today because their flights have been cancelled, they would normally expect to go tomorrow, but the problem is tomorrow's flights, assuming Heathrow does open, tomorrow's flights are full with normally booked passengers. So they have to be placed onto the first available flight with seats available, free seats. So the disruption for passengers, both en route to Heathrow, being dislocated, and then passengers whose flights are cancelled, this could go on for days.
And what could the potential cost of the damage be to both the airport operators and the aviation industry as a whole? And how long could it take to get things back on track?
Look, the disruption cost is going to run into the millions. It's very hard to determine exactly what it is, but certainly well into the many, many millions. It could take up to 2 weeks to get things back to normal for all passengers that are disrupted by this. So because we are moving into the spring season, a surge of passengers going to Europe now, so the flights, many flights are full. So, accommodating all those passengers, tens of thousands of passengers whose flights are cancelled, is going to take some time. And in some cases, it could take a week or so to get back to normal. But one of the questions that I am asking is how come Heathrow Airport, the most important airport in the United Kingdom and in Europe, if you like, doesn't have a backup plan? How come there's no plan B or plan C? Why are they dependent on just one electricity source? There should be several that they could tap into. I find that extraordinary.
Right, and that's a very interesting question. And as you mentioned, many passengers are having to reroute to get to their destinations. Is this going to give a boost to other European hubs?
Look, a temporary boost, yes. And, in the longer term, airlines do look at airports' performance. And if an airport's performance is subpar, they say, well, look, why don't we fly out? Why don't we use this other airport instead? So in a longer term, yes, there may be a decision taken by some carriers that, we don't believe that Heathrow is as reliable an airport as we would like. But the reality is Heathrow is a very, very popular airport. And it's by far and away the airport that airlines do want to fly to, rather than Gatwick. Although Gatwick's a really good airport, Heathrow is the #1 hub for the United Kingdom. So I really don't see any major shift away from this. But what I do see is the British government talking to the owners of Heathrow Airport and saying, please explain why you don't have a backup plan.
Right, and things will become clearer in the coming days. Jeffrey Thomas, Aviation and Travel Editor in Perth, thank you very much for joining us.
It's a pleasure.
To Nigeria now, where port fees have increased by 15% since the beginning of March to upgrade facilities. But drivers fear this could bring their businesses to a halt as they face a spiralling cost of spare parts amid a cost of living crisis. Hilary Noruko has more from the commercial capital, Lagos.
It's a time of intense haggling between Samuel Peter and his spare parts dealer. Samuel is a taxi driver and no stranger to driving a hard bargain. But he's finding it difficult today. His car part seller just won't budge from what cost under $2 before to the over $8 he's charging now.
Came to the market to get some stuff, and the price I'm meeting things today is quite unspeakable. The last time I came to buy things was middle of last year, and by this year it has multiplied by twice. You understand? So formally, for you to knock your bearing, we cannot even buy complete bearing. To knock before is 3,000, and now they are calling it 12,000, 13,000 naira. So it's really on the high side, and it's affecting our business.
Peter's friend Sahid Lawal helps people buy cars. He recently wanted to get one for himself, but he can't afford an imported used vehicle. So he checked out locally used ones and was shocked by the price that has risen from $1,100.
You won't believe that I paid the same car I bought last year around 1.7. Got it to Kogi State, I could not, I couldn't afford to get such again. It has what? It has increased.
Taxi drivers say business is tough in Nigeria. It used to pay well, but now the market is saturated. More people are registering their private cars on rideshare apps and driving to make a quick buck. Add to that, the increasing cost of buying a car and keeping it on the road makes it even more tough for them to turn a decent profit.
Drivers blame a 15% hike in port fees, in parts for the rising cost of cars and spare parts. The Nigerian Ports Authority says the additional revenue will go to improving port infrastructure and equipment. But trade and industry associations argue that they could kill small enterprises in the process.
But we are now saying that, look, so many levies are coming at the same time. We have the one from the data side, from NCC and the telcos. We have the one from custom that was suspended. We had to speak concerning the customs 4% hike also. So we are looking at it that if all of these are coming together at the same time on businesses, then the burden is going to be overwhelming.
Stakeholders recommend a phased introduction of port tariffs in 5% increments over 3 years. This could help businesses adapt and leave cab drivers like Peter and Lawal less worried about their bottom line. Hilary Noruka, TRT World, Lagos.
And that's all your business news for now. Thanks for watching.